financing the 2030 Agenda and the Paris Agreement. This is the tricky bit. Welcome, if you just joined, to the Leaders Summit 2021, brought to you by the UN Global Compact. You can join the conversation anytime using hashtag Leaders Summit if you're on Twitter, and also hashtag Uniting Business, again on Twitter, at Global Compact, is actually keeping track of all of the conversations that we've been having so far. If you're on the Hop-In platform, wow, 6 stages that you can visit. This one is the main plenary stage, multiple other ones, breakout sessions coming up. I'll tell you about those a little bit later. So much to do. I know you're already networking. Let me give you a little clue as to what's going on in the networking. I've been checking it out and seeing what you're up to. I love this from Barbara. Barbara is in Brazil. She says, greetings from Brazil. Very happy to see many panels with women. Yes, sustainability, redressing inequalities. Right here, we walk the talk as well. All right, so there's a group of people that I want you to meet, the CFO Taskforce. I see them a little bit like the Avengers, but with financial superpowers as well, working out the tools and the strategies to finance the 2030 development agenda. Let's check up to see what they've been up to and what motivates them. Take a look.
Hello, and a very warm welcome to everyone. My name is Maggie Lake. I am so excited about this conversation. As you just saw in the video, corporations will need to play a really large role in helping close that financing gap if we want to reach the SDG goals by 2030. And CFOs, as stewards of about $14 trillion in annual spending, are uniquely positioned to be agents of change and progress. Financial superheroes is, I think, what Femi called them, and we're lucky enough to have a few of them here today. Please help me welcome our panel. Alberto de Paoli, he is the CFO of Enel and co-chair of the CFO Taskforce for the SDGs. Scott Mather, Chief Information Officer for Strategies, PIMCO, and co-chair of the CFO Taskforce. Rahul Ghosh, he is the MD, ESG Outreach and Research at Moody's, and Mabinty Koroma-Moore, founder and CFO of Legacy Impact Venture Enterprises Africa. Thank you all for being with us. Alberto, I'd like to start with you first. We're seeing corporations increasingly aligning their corporate strategy with the SDGs. What's the business case for you in activating capital for sustainable finance?
Well, we are a power company, so I think we are in the center of the transition. We are in the center of the bulk of the sustainable business towards the climate action. For us, it's so natural to be fully sustainable, so we decided to be in a fully sustainable business since 2015. Markets are so big in the future to change everything into sustainability that it's not difficult to us to spot what our business model is. We want to offer what we call the sustainability as value. So to say that it's not the fact to do sustainability because we have to do it, but also because it's a business choice. We are pushing electrification of consumption, decarbonization of production, and digitization of infrastructure. There are our 3 mantras that are the bulk of 200 billion of investments we'll do in the next 10 years. I would say 100% within the SDGs umbrella. We work on the 7, the 9, and the 11, and we work for the 13, so the climate action challenge, because we want to reach net zero the sooner that we can.
So, Scott, sustainability as value, that's the argument, that's the pitch. How are investors responding, and are they ready to pay a premium for sustainable investments?
Well, it's in some cases they are. I mean, there's growing evidence for everyone to see that companies that are leading with respect to sustainability and aligning their business strategies around that are going to be the long-term winners. And so I think more and more investors, when you say pay a premium, are thinking about it in terms of investing in a safer place and with a safer issuer that's going to be able to navigate some of the challenges that we have ahead. So for the issuers, what we're finding is they do have a lower cost of capital. You're seeing that when they issue bonds or loans. You see that in terms of stock price performance too. So there's a benefit for both the issuer and the investor.
Yeah, Scott, is this a game changer in terms of what we're seeing in the market from even just a couple of years ago?
Absolutely. Tremendous growth in, we call it sustainable linked instruments in the capital markets. Tremendous change in companies incorporating sustainability into their ongoing reports and describing their strategies. It's just a tremendous growth in terms of that alignment that we've seen. So as I mentioned before, I mean, it's going to be a multi-trillion-dollar asset class if you want to think about it like that in the next couple of years.
Yeah, I think we do want to think about it like that, right? Because we know that we're unleashing the capital, which was one of the really important ingredients of it. But Rahul, one of the things I hear repeatedly is we want to make sure that that capital gets to the right place. And we need common language and standards in this area that we don't really have right now. It seems to me that credit rating agencies, ESG data providers have such a key role to play in that development. Are there specific SDG investment themes that you're hearing where you are seeing a greater demand for deeper analytics?
Yeah, thank you, Maggie, and a pleasure to be here with the superheroes on stage. Data really is the fuel to help us reach the very lofty goals that we have around sustainable finance. And we're seeing an incredible demand for deeper and more sophisticated analytics as well. And I think one area, Maggie, that comes up increasingly when we talk to the market is nature conservation and biodiversity risk. We know life on land, life below water, important SDGs, but biodiversity is important to around 80% of the SDGs if we want to hit our ambitious goals by 2030. And it's a complex area. Businesses sometimes engage in activities that harm nature and lead to biodiversity loss, but they also depend on nature, whether it's natural resources and ecosystems. So we're really seeing a reliance on innovative analytics to really help understand this relationship. So that's new technologies like drones, airborne lasers, satellite sensors that can provide a very high resolution understanding of biodiversity risk. So for instance, here at Moody's, we took some research recently using satellite imagery that showed around 30% of company facilities across 5,000 of the largest companies globally have at least one facility that's associated with biodiversity loss. Now, development of this kind of analytics is still in its early stage, but we expect it to grow as nature and nature-based solutions really does enter into the mainstream in capital markets over the next few years.
That's fascinating. And what's interesting to me when you say that is, and I think we see that even when Alberto talking about the focus for the SDGs for them is it's rarely one, right? So many of them cross over with each other. There's an intersectionality to this conversation that's so important. Mabinty, in that, let's not forget about SDG 5, women and girls have been marginalized across countries and communities. We know that. We talk about it often in these forums. The pandemic has only exacerbated the problems. How can we assist institutional investors who are looking perhaps for gender-based, gender-smart vehicles where they can invest and meet that need for capital among women entrepreneurs? Climate is often one of the first things we hear about, but it's not the only one, and there's a lot of potential to unlock progress in this area. What are you seeing?
I think that's right, Maggie. I think gender is cross-cutting across all of the 17 goals. And I think it's really critical for institutional investors to know there are multiple investment vehicles and strategies. People are talking about blended finance. People are talking about revenue sharing and leveraging philanthropic capital to de-risk investments, particularly when we're talking about emerging and frontier markets. With Live Africa, we focus on how can we engage investors to drive more capital in African women-led businesses? How can we impact positively women and girls? And when we talk about investing in businesses, we can't leave out SDG 8, which is decent work and economic growth. And that's another important SDG that I find impact investors are gravitating to. Even on climate and biodiversity, there is a gender lens that we need to apply, just more generally an inclusive lens. So that involves providing guidance to investors on diversifying their investment teams. teams? Does it reflect the regions and the expertise that you want to invest in? It's looking across the value chain, providing additional support for portfolio managers and improving the way we do origination, due diligence, all the way down to exits. Are we looking through a gender lens? Are we really providing capital that's sustainable, not just to solve a short-term problem, but giving businesses enough runway to deliver material positive impact alongside financial return? You know, Raul talked about analytics and analysis, and I think that's critical. They're using impact measurement and management practices and approaches and frameworks to really understand the degree of impact you're achieving over time. And that creates a degree of accountability. And I think it's encouraging to have the CFO task force and the SDGs and UN Global Compact to really reinforce the importance of KPIs, the importance of reporting and disclosure, to keep companies accountable in terms of where they are in terms of their gender diversity, where they are in terms of inclusion, having regional and ethnic diversity on their teams to ensure that we're reaching historically marginalized communities in a meaningful way. There's an evidence of data that and evidence of information that Scott mentioned that's out in this space in terms of why it's important to invest in alignment with the SDGs. There was a report by IFC and Oliver Wyman that found that gender diverse teams have an increase approximately 25% in valuation compared to unbalanced teams. So it is.
Yeah, and Mabinty, I'm going to jump in because I know, by the way, the IFC has some fantastic data on e-commerce in Asia, what women entrepreneurs can add to that too. So we'll link to that later. The minute you start saying KPIs, I know the ears perk up in this group. So I want to bring in Alberto, because when we're talking about enough runway, I know this is something that you're very passionate about, Alberto. We heard it in the piece about financing the transition. We need to get there and enable businesses to have that runway. You've been a pioneer in sustainability-linked finance. Why is now the right time for these types of financial instruments?
Well, so yes, well, first of all, I would say, so the original name was SDG link bond. So at the beginning, now it's a wider on sustainability. It's a joke. So because we want to express the precise link with SDGs. And this is not a philosophical name, is it? Because SDG are pointing more on target that in our case is a transition. It's not a project by project revolution. It's a revolution made by purposes, not single projects. That's the difference between previous instruments and the sustainable link instruments that are linked to a specific strategy of a company, not the fact that so I have some projects. And this is because sustainability concept is changing. And now is the time. Now companies are focusing the business, the sustainable business model, not the sustainable projects. That's why now is the time to change. So the spirit of instruments supporting the transition. Transition is not only a power transition, it's a whole transition of the society towards a more sustainable way to do business.
And it seems that investors are really responding. Scott, we've been talking about the relationship between corporations and the investment community investors. What about government? What kind of public spending projects can propel CFOs or act as a catalyst? I mean, I know right now here in the United States, there's a massive infrastructure bill that's being debated in the US Congress. What role does government play here?
Well, governments certainly can play a tremendous role in bringing the private sector in and getting the private sector involved. Infrastructure is a great example. Generally, it's called, it's a high multiplier type of spending by government because it does get so many businesses thinking about how they can invest to participate in those programs. And it goes all through the supply chain too. So it is one of the things that government can do to really get the private sector involved and moving towards some of these sustainable projects that need to get done. The other thing is just more partnership. I continue to think that one of the things that's missing when we talk about closing the financing gap and getting trillions moving in the right direction is a partnership with government. Governments aren't going to have enough money to do it by themselves. It's critical they get the private sector involved. So there's numerous ways governments can either start research or start projects, de-risk them, and then bring in the private sector to do the bulk of the financing and the actual activity. And they need the private sector. I mean, the private sector is going to be much more innovative and much more quick when it comes to figuring out how to solve some of these problems. So it's that partnership where I think I would like to see, hopefully we will see a lot more cooperation between government and the private sector.
And I know that's one of the things that the task force is working hard on. And I love you saying it's all about SDG 17. I mean, it really brings to life the need to keep that focus there. Rahul, in order to see the significant change we need in terms of the financing, it needs to be deployed at scale, right? That's what we're talking about. If we look ahead to the next 1 to 3 years, what data do you think we need to support this next step?
Yeah, thanks, Maggie. I mean, coming back to data again, it really is, whether it's embedded in key performance indicators or in sustainability plans, data is absolutely key to connect your investor community and your corporate community. We know that organizations are managing a myriad of risks, whether it's ESG and climate, but also cyber, supply chain exposure as well. And there is a need now to, and COVID has reinforced this, to really put a greater emphasis on scenario planning, on investing for resilience as well. And when it comes to data, what we're seeing from companies, investors, is they really want more granular data sets and metrics to help with identifying risk and looking for insights amid many facts and figures that are out there. So if we take climate change and physical climate risk, for instance, in real estate, we know we need to unlock trillions to move towards a more climate resilient economy. And market practitioners, they want the ability to score individual properties, whether it's power plants or factories or office blocks, for exposure to floods, wildfires, and other climate hazards. And this matters, right? Our data shows that around half of US zip codes over the next 2 decades will have high or very high risk of flooding, 30% to heat stress. And so really we need facility level, very granular data that can be leveraged by investors, lenders, policymakers, and of course companies to better inform how to manage risks and really unlock and invest in resilience going forward.
Yeah, I have a feeling data is going to play a role in Mabinty when we're talking about how to grow gender smart investing in size and influence. What needs to be done, and where and how can we get that capital deployed?
Yeah, I think we also need to provide a technical assistance facility to help not just investees, but also investors to think about the data that they collect. I think data is really important in this space, but identifying what are the KPIs and the metrics that matter. We need to really have a standardized way of reporting and understanding where the gaps exist. And then we can surface where the opportunities that we can really leverage and really address some of the chasms that exist, particularly in emerging and frontier markets. I think in terms of deploying more capital, I think when you don't apply a gender lens, when you're not using an inclusive lens, you're leaving potential opportunity and positive impact on the table. And we can't afford to do that now if we're to achieve the 2030 agenda. I think it's case studies and providing more evidence and examples of how corporates and institutional investors are now gravitating towards using a gender smart investing methodology, and encouraging other institutional investors who are still on the fence that this is a viable strategy, this is delivering positive impact, and there's a growing body of evidence to do so, but also really addressing unconscious bias that exists in the investment decision-making process. I think it's having these honest conversations and just looking at the composition of your teams in order to begin that journey of how can we first reflect the change that we want to see in the way that we invest. And so I think that Absolutely. Is one of the big steps.
And I'm happy to see, some of the HR professionals, CHORs being pulled into the conversations when we talk about SDGs being at the core of business strategy, into the conversations with the sustainability chiefs, with the CFOs to work together on that. We're almost out of time, but very briefly, Alberto and Scott, I'm going to leave you with the last word. And, there's a lot of conversation, institutions looking at more regulation, standardization of ESG disclosures. How will that impact your business? Alberto, let's start with you.
Well, I think so. First of all, it's really important that we can have a common language in talking about sustainability. It's at the very beginning of a new revolution, so you have different definitions of the same things. It's useful, it's normal, it's good. But now that sustainability is becoming a business, we have to have the same words in the world, like we have today on the normal finance that we do. So when we say EBITDA, everyone of us know what does it mean. But so now the problem is that we need the new words for the new world. So now there are different concepts. So taxonomy, SDGs, and a different way to name same things. So we are seeing, and in the CFO Taskforce, we are working very actively in trying to gather different views in only one. So it's useful for us CFOs to talk to investors, to markets, to everyone on the new concept that we are building.
Yeah, Scott, do you want to weigh in here?
Yeah, certainly. I think, when we look at it, our business, our clients are all over the globe. We're investing all over the globe. So having that common sort of framework, common language, as investors, we always want more. We want more details, we want more granularity, but we also find it very difficult when we're speaking 20 different languages of sustainability. So that's one of the reasons why we've been big advocates of the SDGs. It's something that it is the global language of sustainability. It is something that policymakers understand. It's something that regulators understand, consumers understand, and certainly increasingly investors are very desirous of speaking that language and having that be sort of one of the unifying frameworks.
And I know that all of you here are working hard on that, not only in the task force and behind the scenes. And as we draw to a close, I think it's really worth pointing out that this conversation is a reflection of the mission of the task force. It was convened as a platform for CFOs to interact with their peers, investors, financial institutions, the United Nations, to share ideas, develop concepts and framework, and provide the recommendations to try to unlock that private capital that is so needed. So thank you for all of you for the work you're doing on that front. Thank you to the co-chairs of the CFO Task Force, Scott and Alberto, and our panelists, Rahul and Mabinty. It's been a fantastic conversation. I know it's going to continue. Thank you to all of the participants for watching, and I hope we'll see you all again soon. Thank you.
What a treat it was to be on the same virtual platform as Maggie and Scott, Rahul, Alberto and Mabinty. Did you see their capes just at the back? Just floating there, their superhero powers right there at the Leaders Summit. We are going to take a break. This is the main plenary stage. We are going to take a break for 10 minutes, but let me tell you the kind of things that you can be doing during your break. You can be checking out Leaders Summit, #Leaders Summit, Uniting Business. Check out that, see what you may have missed. You can be heading back to YouTube and see some of the earlier sessions. That is absolutely possible. If you're on the Hop-In platform, have a look inside the pavilions, they're excellent. And also, maybe you might want to start scouting out what breakout session you are going to be going to a little bit later on. And also, there is a photo booth. I may or may not have already taken a picture. You can have a beautiful Leaders Summit, Uniting Business background for 2021 Leaders Summit. And if you look in the gallery, maybe you might find your MC, your host there for the next few hours. I will leave you to take up the activity of your choice, and I will see you back here on the main stage in 10 minutes' time. See you then.